Hey guys, hope everybody's doing well. I can't believe we're already through another week. This is my weekly update where I go over all my options trade for the week, which is from last Wednesday to the close of Tuesday of the following week. And I do this every Wednesday. So if you want to follow along, like, share, subscribe, do all that good stuff. But these take a little while to get through, and so we'll just jump right in. So what we're going to start with is the one I talked about last week, and I misspoke, and I knew I misspoke right when I said it, but I couldn't correct myself because I was on a roll. As you guys know, I don't do anything on a script; it just flies off the top of my head. And that was my AHT position. And I told you that this one might come back to bite me in the butt, and it's still possible, but what I did say was that if all my puts and calls got assigned or expired, I'd have a cost basis of $1.53, and that's not true. Because if my puts get assigned, I'd have a cost basis of $5 since I have a $5 strike on it. So I don't know what I was thinking there. But what I did do, I have managed some of this. I did close out, and we'll go over this later too. I did close out 2 put contracts that I had on for a $5 strike. I closed them out for 63.5 cents a piece. Total profit of 89.46. I did that because AHT looked like it was going down, and it has. This price is actually wrong. It's actually in the 470s now, I believe. But it was just above $5 when I took this off, and it had this $90 in profit sitting there. So I said, you know what? I'm going to take that and run. But I still do currently have 300 shares with my cost basis of $4.30. I have 5 puts at a $5 strike, and I have 3 calls at a $5 strike. Both expiring July 16th. So we'll just have to wait and see how that moves. One or the other is going to happen. Either my shares are going to get called away, or I'm going to own 500 more shares. One of the two. We'll see. So we'll just jump right into what I did in the whole week. Now, last Wednesday, I took a vacation day from options. So you'll see that I only started from June 24th. Wednesday, me and the family went to Six Flags Discovery Kingdom. Had a great time. We just went for the day, and I just took the day off of options. But the week ended up pretty well, and we'll go through that. So these are going to be my closed positions of what I closed throughout this week. And we'll see that I closed out Intel on June 24th, which was Monday. Closed that out for a exit price of 25 cents. I had collected 55 cents on that, and I had 2 contracts. So total profit of $57.90 for 27-day hold. A little longer hold than I like, but I like to sell long DTEs, which is days to expiration, but I really don't like holding them that long. Caterpillar. Now, I did get out of Caterpillar early, a little too early actually. I had closed it out on Monday for 80 cents for a profit of $48.72, and I originally sold it for $1.30, so it wasn't a big profit margin. But I wanted to get out of Caterpillar because they do have earnings coming up, and I just wanted to get out of the way. I don't like holding an option through earnings. I like for earnings, I like for the market to decide what they're going to do with the stock after they issue earnings. So if they issue earnings and the stock tanks 10%, now I know I can go in and sell some puts, right? So if I were in it and the stock tanked 10% and I'm in a put and I get, it goes the wrong way. So I don't like having puts on through earnings. Next up was XOP. This is the oil and gas exploration ETF. Closed that out for 55 cents. Had 1 contract, profit of 68.62 in 7 days. My Uber put, I closed that out for 28 cents. That was a profit of 32.60 in 3 days. So I did that all on Monday. No, that's not Monday. That's Thursday. Sorry. So then Friday, I closed out my Corsair position. That's ticker symbol SCRSR. Closed that out for 40 cents. Profit of 84.72 for 21 days. Closed out my Zillow position for 50 cents. That was 83.48 profit in 10 days. And then another one I closed out was Herman Miller. This is ticker symbol MLHR. I closed it out because they had earnings, and I didn't want to be in the way of earnings. Even though I had the gut feeling that it was going to be fine, I still wanted out of it. I don't like to hold options during earnings, and it would have been fine, but I don't want to make that gamble. So I closed that out for 45 cents and took a profit of $19.48 over 9 days. Let's see. And then there's those AHT puts that I closed out for 63.5 cents. So 89.46 profit in 20 days. This is Monday now. And then also Monday, I closed out my John Deere put. It had a strike price of $2.95. Closed it out for 65 cents for a profit of $153.48 over a period of 11 days. Now, this was part of a strangle, so I still have a naked call sitting out there at 380. I think I'll be fine. It's at the stock price currently is at 348.93, and it's got a few weeks to go. I'll close it out if I have to. I mean, it's down a little bit, but it's not scary at all so far. And then also on Tuesday. Now I'm going to talk about this twice. This is a Amazon credit spread. Now, if you're not familiar with credit spreads, this is where you sell a put, and then say you sell a put at $100, and then you buy another put on the same date for $90. Correct? You have a $10 difference in there. So 10 times 100 would be $1,000, right? Wait, is that right? Nope. Yeah, that's right. 10 times 100 is $1,000. So that would be the maximum you can lose on that credit spread. So you get the difference between what you sold and what you bought. And that's what I've been practicing on, putting out some spreads. And I did a Amazon spread. I can't put both puts in here. I guess I could, but it'd be difficult to explain. But anyway, I closed out that spread. I sold it for $1.25. I closed it for 65 cents. And I had a profit of $57.15. So that wasn't bad. Now, that was a 3-day hold, but it really wasn't a 3-day hold. This counts weekends. So it was only a 1-day market hold, if that makes sense, because I put it on Friday and I took it off on Monday for a profit of $57.15. Now, today, which is Tuesday, I closed off my TQQ put. It had an expiration of September 17th, but anytime the market falls pretty decent, I put on a TQQQ at a very conservative strike price. I had a strike of $55 on this, and you can see the current stock price $123. But at the time, I collected $1.20. I bought it back today for 71 cents. Profit of $47.67 for a 2-week hold. I kind of use that TQQQ as kind of a. I could have just left it and almost been like a savings account, almost. But I mean, even if TQQ went down to $55, I would have been happy as a clam to buy that at that price. And then last but not least, I closed out my Vizio puts, paid 9 cents for 2 of those contracts, and total profit was $79.46 over 12 days. Now we'll move over to what I opened, and we'll just sort this A to Z. Whoops, wrong. Open date A to Z. And we'll look from the 24th. Is that it? Yep. So some of these are going to be repeated because some of these I closed out. So this is all what I opened from Thursday to Tuesday because I took Wednesday off. So I opened a Rocket covered call for the 23 strike, one contract. I didn't even talk about that, did I? Yeah, I have a Rocket covered call that I put on June 24th for a July 2nd expiration. I collected 21 cents there. So Rocket just keeps hanging on, making money. So that expires July 2nd and $20.31. We'll see if I buy it back and sell another one. Next up, this was a gamble play. There's no ifs, ands, or buts about it. This is CVM. It's some sort of... see, that's the problem. I can't even tell you what they do. They do some sort of health biotech thing. And, I don't advise gambling. But the stock price at the date of contract, this always happens to me. When I go and just try to be cute and try to be fancy, something happens, right? So stock price dated contract was $23.30. I sold it with an expiration date of July 16th, and I did a strike price of $10. So it had to drop almost, 60% or more for it to be even challenged. I sold 3 of those contracts and collected 33 cents a piece. I even got paid 42 cents to put the trade on. Collected $99.42 in premium. The very next day, I don't know if it was the very next day, it was in the next day or two, the stock dropped from $23.30 all the way down to today's price of $12.83. Try to be cute. You play these meme stocks and things like that. That's the kind of thing that can happen to you. Okay, so what can I say? Now I'm still safe. I'm at $10. As long as it stays above $10, I'm fine. But if it drops another 50%, just because that's how meme stocks work sometimes, I'd be owning or taking a big loss on this one. So don't play meme stocks if you can help it. Next up, this was also Monday. Not Monday. Darn it. This was Thursday. I opened a lemonade put with an expiration date of July 30th. Strike price of $85. Received $1.45 in premium, one contract. And also on Monday, opened up a ARK ETF put with an expiration of July 30th. 110 strike, collected $1.48 in premium there, one contract. Then on Friday, this was the Amazon spread. I did a 32.65, 32.55 credit spread, collected $1.25, one contract, ended up exiting for 65 cents, like we talked about earlier. And then Wish, I opened up a put contract with a $10 strike, expires July 30th, one contract, collected $74.31 in premium. And then on Monday, I got cute, and I sold another credit spread. I know Thumper was talking about this. I forget when he was talking about. Was he talking about it in his video? I'll have to probably link his last video, and we'll see if he was talking about it there. But we did I did the 1850 and 1750 credit spread, collected 43 cents. So 1850 and 1750, that's only a $1 spread. So that's your max loss is $100, right? But it's also minus the credit you received. So $100 minus 43. I think he got a much better price on it because he did it, I think, today. But you're risking $57 to make 43. That's kind of how that works. So I sold 3 of those, collected $126.83, and we'll see. It's going against me at the moment because its stock price is at $18.87. This is also sort of a gamble, but it's a lot safer because you bought the protection of the protective put. And then I resold XOP ETF. I'm starting to build out August, and went out to August 6th on this one. Strike price at $85. One contract for $154 in premium. ARC-G, which is the genomic, I think that's the way you say it, ETF from ARK Invest. Same expiration, August 6th. Strike price at $82. Collected $115 in premium. UNFI is the Unified Foods. It's in the consumer defensive sector. August 20th. Got 52 days till expiration. You'll see all the next 5 puts I put on were 52-day expirations. This was a $30 strike. I sold 2 of these contracts, collected 80 cents each on them for $160, but I also got paid 8 cents to put those on. Ollie is a retailer, like a bargain retailer. Another August 20th, $75 strike price. Collected $1 on that one for 1 contract. And my favorite, one of my favorites, Winnebago, another August 20th contract, $55 strike, 65 cents in premium for 1 contract. And Academy Sports Online, or Outdoors, I believe it's called. It's a sporting goods, hunting, fishing retailer. Another August 20th, did a 32 strike. 2 contracts there at 60 cents a piece. Got paid 8 cents to put those on. And then today, Tuesday, I only put 1 on, and that's ticker symbol PBW. That is a clean energy index ETF. And another August 20th expiration. And did a 75 strike. Collected $85 on that 1 contract. So that's all I put on. I took off, I think I took off like 10 or 11 positions, and I put on, I believe this is 14. So we'll take a look real quick at the premium cooking, and you'll see premium cooking for July. I took some off, so I got $24.84.52 of premium cooking. And then I'm starting to build out August, and I already have almost $800, so $798.63 of premium cooking for August. So for the week overall, it was a great week, despite me taking a day off and going on vacation. We closed $822.75 in realized profit for the week, and we opened $1,535.50 of premium for the week. Now, I usually like to double what I close out, and I haven't done it. I didn't do it last week, and I didn't do it this week either, but because I usually take profits around 50%, 50 to 70% usually, so I like to at least double what I've taken out. So at least that sets up for the same, depending on market conditions, it sets up the same income amount for the following week. Usually, that's how I'm hoping it works out anyway. So that's it, guys. Week went well. We're learning credit spreads. I hope I can take advantage of some of these credit spreads a little bit. They seem to move a little bit slower than I'm used to, except for that Amazon one. That Amazon one went quick. And but the week before, I think I held a Kimberly Clark credit spread for like 3 weeks, and it was like boring. So now I got a SoFi one on. We'll see how that works out. Stay tuned. Follow me. Follow Dave as well. Follow Thumper. Join the Discord. All that good stuff. You guys have a great week of trading, and we'll talk to you later. Thanks. Bye-bye. I am not a financial advisor. The information contained in this video is for entertainment and informational purposes only. It is not intended to be investment advice. Please seek a licensed professional for any investment, tax, or legal advice. Thank you.